Hello, everyone. I am Terrace Party, and I'm coming to you today with another quick lesson in charts and candles. How many of you have ever been intimidated by the charts? And when you see them, you just want to say, you know what? Forget the whole thing. I don't want to learn. Well, today I'm going to try to help you um, alleviate some of those fears. I have already set my timer to 15 minutes, so let's get started. All right, so why do we even need the charts in the first place? The charts tell us price action. That just simply means what the price is doing, if it's going up, if it's going down. It shows us significant levels to buy and sell stock. So if you are a day trader or even an investor, you want to know where you need to buy a stock, and you also need to know where to sell the stock for profit. So that's what the chart is going to show you. The chart also shows you direction or movement of the price. So you don't want to be going against a bullish trend. And when I say bullish trend, I mean that the price is going up. If I was to say bearish trend, then the price will be going down. So you don't want to be going against those trends when you are getting ready to buy a particular stock. Um, Charts also tell us the cost of the stock, where it's actually trading. How much is it? Because the cost of a stock can change every second, and so you want to be able to know how much you're spending on that stock. And it also shows us the behavior of the stock. Is it going sideways? Is it being contained in the same area? That's what sideways movement means. Is it going up rapidly? Is it gapped way up? Is there like spaces in between the price? It will tell us the behavior of the stock. So this is why it is important to learn what your charts look like. All right, so your candles are the little red and green things, or whatever color you have them on your chart. Those are what we use to read the chart. So there, if you have a book, then you have words on a page. Candles are words on a chart. So the green candle means that the price is going up. The red candle means that the price is going down. Now, this is the basis of your candles. There are so many other candlestick patterns that you can learn, but we're only going to go over the basics today, because remember, this class is only 15 minutes long. But you have doji candles, you have hammers, but the idea is you need to understand the anatomy of the candle. So when we're looking at a green candle, each candle has four things identifying the candle's price. You have the low, so that's the lowest that the price got within a particular session. You have the high, that's the highest that the price got within a particular session. And you have a close and an opening. So on the green candles, this is where they differ. On the green candle, the opening starts at the bottom and it pushes up to close. It closes up. So remember that. On the red candle, it opens up but closes down, because that's when it opens. Let's say you have a green candle and the green candle closed and the very next candle is a down candle. Well, that's because the green candle just closed right here. So when it opens, when the red candle opens, it pushes down and it closes down. So if you have a red candle and the next candle is red, it closed down here, and so just slide it on over, and then you'll have the opening of a new red candle, which also will close down. Okay, kind of counterintuitive, but if you really look at it on the chart, you'll see exactly what I'm talking about. So make sure you remember that the most important thing on your candle is going to be your close. You always want to know how the candle closed, okay? Now, the stock market opens at 9:30 Eastern Standard Time and closes at 4 p.m. Eastern Standard Time. So the first thing that I'm always looking for when I am day trading is, where did the stock close on the last session? So I go to the candle that closed at 4 o'clock Eastern Standard Time, and I mark where it actually closed. And that will give me an idea of how I need to be trading for the day. I'm also going to do a free day trading strategy for you that's coming up, so stay tuned. You can go to the website and find that. Now we're going to discuss candlestick patterns, because it's not enough just to see candles all over the chart. You have to know your candlestick patterns. Now, I personally like these 4 candlestick patterns because they're easily identified, and I like them. They are very high probability patterns. When I see these patterns, this is how I know I need to prepare to get into a trade. Now, patterns are just patterns unless they are at a level of support or resistance, which we're going to talk about in the next slide. But for right now, I want you to review these patterns. So you can see the bulls, meaning that the price is going up. When we see these candlestick patterns, the engulfing patterns, candlestick patterns, that means that the green pattern completely engulfs the red pattern. And for the red, it's going to be the opposite. And I say 4 candlestick patterns because they're really all the same. They're just opposites of each other. So you have the hammer here, and then for the bears, you have the shooting star, or the inverted hammer, as I like to call them. So it's the same pattern, it's just the opposite. So with the piercing pattern, you have the green on the right, and it opens below the close of the red candle and closes halfway or more of the first candle. And then you have your bullish harami. It is a smaller body candle that actually fits inside of I actually love this setup, and I love this setup here. So you'll see those patterns on the chart, and then you'll know that it's time to buy or sell. All right, now we talked about support or resistance. Your basic trading plan is going to be the foundation of trading is going to be founded upon support or resistance. The support, I want you to think about the support as the floor. That means that when we come to this level, the price should go up. But when we come to a level of resistance, that is where we want to sell. And when you think about resistance, you think about somebody is resisting you. What are they doing? They're pushing you down. They're keeping you from going up. And if someone is supporting you, they're holding you up. They got your back. So they want you to go forward. So think of price in that manner. Now, once resistance has broken, as you can see in the slide, once it has broken, now that same resistance is serving as support. So the roles are interchangeable as the price breaks and closes above those levels. So this is how we know when to enter and when to exit a trade. Okay. I want to quickly, I'm going to go on let's go look at a real chart, and let's look at what the market did. Let's look at SPY. So if we were only to look at this area right here when the market opened, we can mark out our resistance, which is here. Here, take off my glasses. Resistance is right here on this candle. Why? Because you can see the sharp move to the downside. So I told you that once price breaks and closes above our our resistance area. Now it's serving as support. As you can see, this candle came down here and touched it and pushed up. Can you find another area of support or resistance? Did you say this right here? Did you say this area here? Because if you did, that is resistance. Look at how the price, it peaks here and then it comes down. Now, what is this right here? I bet you already know it. This is support over here. So we found support here. And we also have a candlestick pattern. Now, I'm going to widen that out for you. Remember we were talking about the hammer? That looks like a hammer, right? And over here, we have a nice little sideway movement because it's staying in the same area. That's okay. But we found support here. And we have a nice size candle. Now, they're not going to be perfect, but this is a green candle, so we know that the price or the bulls are in control at this support level, okay? Now that we've broken and closed above this resistance level, all we have to do is wait for the price to come back down to this level, create some type of bullish pattern, and then that gives us our clue to enter into the trade. Now, I just wanted to show you what simple support and resistance look like. If we were to move to a higher time frame, like let's say the daily time frame, for those of you who like to purchase shares and you want to know, hey, what's a good time to get into this stock? Last week, the prices were dropping all the way down. So where is our support? We look to the left side of our chart, and this is where we can find our support right here. So here's what we can do. We can say, hey, when the price came down here last week and then it closed above here, well, the next day we know, hey, this is somewhere that we can buy the price. We can buy SPY at $581.05 a share. And if you had done that, you would be up about $27 per share. So if you bought 10 shares, 10 times 27 would give you $270. So not a bad day at the office. So this is how we just simply do basic day trading. If you're interested in doing such a skill, learning such a skill, because it is a skill set that you have to learn. All right. Now, if you want to work with me, this is how you work with me. This is my information. You can day trade futures with me 3 times a week. We trade it live. And or you can take the self-paced options and stock course. It goes into deeper depth, more deeper than we went in this class. And or you can do a specialized one-on-one session. Maybe you have questions. Maybe you already know how to trade and you're not having profitability and you just want to learn a strategy, or you want to learn how to tweak your strategy. Whatever your needs are, I'm here. These are the offerings that I have. This video is going to be free on the website, so you can go to payhip.com, Maglite Trading and Education. That's all I have for you. I believe I stay within my 15-minute range because my bell has not rung. I have 40 seconds. So you guys have a fabulous day learning and get started today. Bye-bye.